We are officially back to where we were before the pandemic began. Well, almost. Let's talk about that today. I have some fresh visuals, brand new stats, and I want to dive into Sacramento trends as well as touch on what's going on with unemployment. Okay, this is Ryan with SacramentoAppraisalBlog.com. This will be about 15 minutes. Let's jump in together. So, the big news of the week is that pending contracts have now eclipsed where we were before the pandemic began. Okay, when in mid-March, when the coronavirus really began to hit the market and shape and affect the market, we saw a sharp decline in pendings where buyers backed off the market. But over the past about 6 to 7 weeks, we've seen buyers come back to the market. Okay, we're not to where we would be in a normal year, but I think we take this good news in stride that we're 5.2% higher than where we were when this began. Okay, big news that I think we've been waiting for. Here's a different way to look at pendings. These are pendings by the day from January through May. And you can see that the highest number of daily pendings occurred last week. Last Monday, there were 149 pendings in the Sacramento region. And so it just showed that the last weekend was very aggressive. A lot of buyers came out to shop. Now, what I'm looking for in particular is what happened this weekend. We will see the data in the next 2 to 3 days come out, and we'll get a sense of did buyers persist on this trend, or did they show up in a strong way, or did they express more hesitancy in light of news of unemployment on Friday? So to be determined. But here's why the market's so competitive right now. You can see listings in red in 2020 by the week, and then pendings in orange at 2020 by the week. And when these two are very close, when the range tightens as it did over the past week, it makes the market feel more competitive. Essentially, what we want to see to see maybe the market soften a little bit is we want to see more listings, because if there aren't enough listings on the market, then it just makes things more competitive. Okay, so let's sort of pay attention to this gap week by week to see where it's at. Now here's a look at pendings. This is called a histogram, and it basically shows how pendings are dispersed by price. These are pendings since May 1st, and you could basically see no matter what the price, there have been pendings. It's very normal to see less pendings at higher price levels, but what we want to do over time is just to keep watching this and go, all right, is the market changing in different segments? Are we seeing different trends emerge? Okay, and so if you are, please share something in the comments. What are you seeing at the high end? Because the stories today become the stats of tomorrow. Okay, I have different ways I'm going to be showing this dynamic over the next 3 to 4 months, but we're still just a couple months into this. All right, here's a different way to consider pendings. That 51.6% of April sales had multiple offers, and we could see this number sort of slowly tick down, because as of May 1st, pendings have shown 47.1%. Now, that's still a very strong number. It's frankly higher than it was last year at the same time, but it just shows that the market is a little bit softer right now. Buyers have gained a little bit more power. Okay, and so my sense is that over the past few weeks, as I've been pulling these numbers, it was 49%, then now it's 47%, and so it just shows that okay, maybe the market is softening slightly. Okay, we'll see where that number goes though. Okay, here's new listings by the week, and we can see that there's a definitive dip in mid-March, and since then listings have started to come back. Okay, sellers have gotten more used to the market. Frankly, we still need more sellers to get used to the market. There's a real need, so maybe some of those on hold to get to really change your status to active. But this past week there were 676. This was the highest number of new listings since we bottomed out in our first week of sheltering in place. We're down about 5.6% from when the pandemic first began. Here's a different way to look at listings. You can see listings in 2020 in red and listings in 2019 in light blue. And you can basically see that listings in 2020 took a detour. These are new listings in mid-March, and the trend should have kept going up like it does in a normal year, but it took a detour, and then since then, the trajectory has been about what it should be, okay? And so, we're still down from where we were last year. This past week was down 15%, but previous weeks are really down, 25%, 30%, 35%, and so we've got a ways to go before we recover, but at least last week we were only down about 117 listings from where we should be. Here's a different way to look at the same trend. And so you can see from March through May, here are 2020 listings in red. You can see there was a dip when the coronavirus pandemic happened, and then since then a recovery as we're looking in red. And 2019 is the same week last year. Now, which do you like best? Which graph should I keep doing? Is it, this one, the line graph, or the bar chart? Maybe leave me a comment. Let me know. Okay, so last week I gave away this sign and I'll announce the winner today. And this week, I love woodworking. I have some different types of signs. These are kind of random. Now, this is valuable for two reasons, really. Number one, a lot of people are leaving the market in California. And so if you're going to Nevada, Oregon, Arizona, Idaho, or just saying goodbye to California, this type of sign is just, it's fun for taking a picture with the family in front of the moving truck. And then, take it to your new state, maybe hanging up on a mantle or something. But also, if you're a real estate agent, this might be good for your desk just to keep in the background as a reminder to meet the needs of sellers in our market, as some people talk about leaving. Okay. So anyway, if you want something, leave something in the comments. And by the way, make sure you like this video if I'm adding you value, and please subscribe. Thank you so much. So here are hold properties. So there was a huge uptick when the coronavirus pandemic happened, and since then we've seen hold statuses decline. Okay, holds are still elevated a little bit from where we were pre-coronavirus. But unlike holds, we're seeing cancellations really at very similar levels to where we were before this all began. And so the mass cancellations have really halted, and we're at about normal levels this past week compared to before. Okay, it makes sense that we're seeing more holds because there still is hesitancy among sellers whether should I list my property or not. There's still hundreds of properties that are currently on hold waiting to see what happens. All right. Here's a new graph. This is from North State BIA, and it shows new construction sales for April. And what you can see in 2020 compared to previous years is that sales volume was down dramatically. Now, it makes sense, right? We had less pending contracts in the whole entire region, and so eventually we're going to have less sales. And so it's not surprising to see this dynamic. But I think I wanted to share this for one important reason, that just to really communicate if the market is not insulated, the new construction market isn't immune to the trend of the rest of the market. Neither is the high end or the low end or East Sac or Land Park or whatever neighborhood it is. Sometimes we talk about neighborhoods like they won't feel the trend. Everyone feels the trend when a market changes, whether it's going up or down or there's a pandemic. The trend isn't felt the same everywhere, though. All right. Let's look at volume in the region. In 2020 is in blue, weekly volume, and it's clearly been going down lately. And I think this reflects, remember, about 6 weeks ago to 8 weeks ago, we saw a 45% drop in pendings. And so as we have these properties closing, it reflects that loss in pendings. Okay, and so this week compared to the same week last year, we're down 44%. There's 266 less sales. That's pretty wild. But here's some good news. So here's all the data that I just shared. But when you go down and you look at sales, I have this chart blank for this very past week that ended yesterday because all the sales aren't entered into MLS yet. It's going to take about a week for all this data to show up. But the preliminary number, it's actually in the low 330s. And so my sense is that this number here is going to be about 400 to 430 or so before the week's up. And so what we're going to start to see is this graph, we're going to start to see sales volume tick up. Because remember, we've seen pending contracts tick up for the past 6 or so weeks. And so it makes sense that we're going to see this trend show up in the sales. And so that's here this week. It's been a reversal. We're not back to where we were when the pandemic first began, but we're going to be inching closer. Okay. Now let's talk about unemployment, prices, and then I'm going to close this thing out. So I think we had unemployment news come out for California and in most states across the country this last Friday, and you could see that it hit 15.5%, which is just astounding that it was 5.5% the month before. And so let's unpack sort of some thoughts about unemployment, but here's exactly why it's important. This is a comment on my Facebook page when I shared the graphs I'm just about ready to share. Lauren says, and she gave me permission to share, as a buyer, we are being extra cautious about the price we are willing to pay right now. We already sold our home and we are in limbo, but it just doesn't feel right to pay top dollar right now. We recognize prices have been holding steady, but we just feel so less confident. And even though our income hasn't been harmed, we are way less aggressive and much more sensitive now. And so, what I've been talking about is the psyche of buyers and sellers being shaped by data that's coming out and, especially unemployment. As people see numbers, it reminds them of 2008. It reminds them of a previous market. And so that's something that can get in the psyche of buyers and sellers. Or here, shared with permission, Realtor Dan Herbert. This was in a Facebook thread of a video I did. And he talked about his seller, and his seller said this: given the impending 10% pay cut coming from state workers, I'll probably have to lower the price again if there are no offers soon. And so it sounds like this seller maybe needs to get into a proper pricing situation anyway, but the seller's very aware, though, of what's happening and paying attention to the market. And that's exactly what I would recommend for sellers. Sellers, we've got to know what's happening in the market. And if the psyche of buyers change and reflect more what Lauren was saying or what four other people in this same thread said that, hey, I'm going to wait and see, or, I'm going to hold off, then sellers certainly have to price correctly. Okay, so here's some quick unemployment data, and then we'll talk about prices and close up. So in California, here's what it looks like. There was a sharp increase, 15.5% unemployment rate, and every single county in California right now has double-digit unemployment. Okay, 1.83 million people in California filed for unemployment last month. It's just astounding, and let's remember this represents real people. Okay, here's Sacramento County. Again, same trend where it just shot up, 14.7% unemployment. And you can see the rate in Placer, El Dorado, and Yolo. I mean, everyone has, folks that are not working right now. Okay, here it is in the United States, very similar dynamic, 14.7% unemployment rate, but over 38 million people have filed for unemployment since March. Isn't that incredible? This is really the worst rate since the Great Depression, technically. And I say technically not to minimize what's happening right now. Okay, my sense is that we need a number of months to really figure out, how this unemployment rate is going to impact us and what this represents. Okay, because if workers start to get back to work and then we see this rate go down, then we can go, okay, isn't this prolonged thing where we've been ticking up, for many months, and where we've achieved this, and we really got here in one instance, and the hope is that we'll get back down fairly quickly. Though we need time and objectivity to really see how this goes. Okay, a couple quick thoughts on prices. We're going to need to keep watching the median price by the week. In Sacramento County, like I said, every week in 2020 it's in blue, 2019 in red, 2018 in green. It's all over the place. It's sort of been hovering between 395 and 400. If anything, prices have been somewhat flat in Sacramento County as a whole. In the region, we've seen a dip in the median price. It's down 1% from March to April, and my suspicion is it might go down again in May, but we'll see. We really need to wait a couple more weeks before we start pulling May stats definitively. But we also need to understand, what does this represent? Like I always say, when there's less data, data can get a little bit wonky, all right? And so I'm not minimizing the reality that, hey, maybe prices have softened in light of coronavirus. Maybe they have declined slightly as we've been in a pandemic, all right? But we need to understand this dynamic. When we have less data, it can lead to some skewed numbers. And we have to realize too and analyze over time, are we seeing more sales at the bottom of the market that's pushing down the median price point? Okay, so we only have 2 months under our belt. We need more time. Okay, on that note, some closing thoughts. My first thing, we need time to see this trend. We need days, we need weeks, and we need months. I'll keep updating you guys. And if you like this video, please give it a thumbs up. Okay, I'm not positive or negative. I had a friend this week, actually, we were having drinks on my lawn last night, safe distance, and he said, yeah, I listened to one of your videos recently, and yeah, it sounded really positive. You were being so positive. And I said, well, I'm being positive. I might sound positive if the stats are positive. Okay, so I'm neutral, and if we have some stats that sag, I'm certainly going to be perceived as negative. Okay, but I'm just going to spew the facts. Thirdly, let's watch the psyche of buyers and sellers, particularly over these next couple weeks, and we'll just be able to analyze: is there an effect? Has something changed in terms of sellers wanting to list their homes in light of seeing unemployment stats, or buyers being a little bit more haphazard? Like, the proof of value and the proof of the trend will be seen in the stats and the stories. Okay. Last but not least, be safe out there. Thank you again, guys. I really appreciate you watching these. I'll keep doing these. My goal is to do one market update per week, hopefully keep it under 15 minutes or so, but hope you found value here. Thanks so much.